away from me, and I'm going to go over this with you guys here. So, but first, let's start off with the S&Ps. Okay, do this here. All right. So, for the new people in the room, we talk a lot about. I'm a pattern trader. Okay, pattern value trader, and I also price. Right, I like to read price. I like to but patterns is probably one of my things with the value. Okay, so this is like the volume profile. Coach Ray went over some volume profile in his session previously, so that should help things move along and make you understand a little bit better. All right, but let's go over some of the patterns, the most common patterns that we see in these markets. All right, so anybody know what this pattern is here? Ascending triangle. Very good. What's this one here? Bull flag. Very good. What's this one here? This one. All right, break of trend. Trend reversal pattern. What's this one here? Megaphone. Very good. What's this one here? The other day, market open, did it just show us guys manipulate your servers? I'm not sure what that means. Yes, Scott, head and shoulder. What's this one here? Pennant. Okay, very good. So these are probably the most common patterns, right? And then if you flip these over, you have the reverse of those, right? You'd have a bear flag if this was to the downside, inverse head and shoulders. All right. So these are the most common patterns. So let's just go today and look at the S&P. Last one is crude wedge. All right. All right. So these are some levels from previous sessions that we were watching. Okay. So we have a volume point of control, naked volume point of control here. All right. So we were watching that. We had a naked volume point of control here. All right. We had this, just to go over some of the things we were looking at. Well, let's look at this frame. Okay. So we just went over some patterns. So what do we have in this frame here? What do we have there? No, right here. Well, you could take this off. You could take that off. What do we have here? Right. We have a trend line, and then what happens is to this trend line. What happens? Right. We have this, right? A reversal. Right. So look, we're heading up. 1, 2, 3, 4, 5 trading days, and then we come down. 1, 2, 3, 4 trading days, right? And where does this market come down to? So we kind of have a head and shoulders here too, right? I have head and shoulders right here. Shoulder, the head, the shoulder, right? Let me just get my tools here. Where is it? There we go. All right, so we have like, something like this, right? head and shoulders action. And then you take the measured move, right? So we take a measured move from here, the top of the head to the neckline, which is right there. And then we have our measured move. And the market came down and then it kind of bounced. So we almost got the measured move out of it. But where do we get? This looks like a big mountain, right? Got a big mountain. So we come up, we come all the way down, we get to the base of the mountain, and then we bounce. Okay. So then we have an inner trend line. We had our outer trend line right here. All right. And then this one came later. So we had this inner trend line, we had this outer trend line. And then what do we say? We say a lot of times when the market, if it's below the trend line and it gets above it, it might move to the next one. It's a good possibility. And that's what it did. It got above it, it tested the backside, and then it got to the next trend line. Okay, poked above it, got below it, came back, tested back to the base of the mountain, back to the trend line right here, right? And then we hung out above it, got back into this resistance zone, broke through it, and we rallied up. Okay, got to this point of control, this naked point of control right here on volume profile. And then we're kind of pushing, trying to push up. So let's go on today. Let's look at today's trade. And let's see here. All right, so here's an old POC. Let's look at today's open. I'm going to bring this to a 5-minute chart. All right, and today we open with a gap. Okay, so let's remove the overnight data real quick. We're going to go to regular trading hours only, and then you're going to see the gap. All right. So we opened today with a big gap. Overnight inventory was to the long side. Okay, here's our gap from the previous session. All right, this is a gap open. Initially, we opened above this point of control from back on the 27th. Yeah. Okay, we opened above this point of control. Gap open. 5-minute open range trade was in play today. We have a 5-minute open range right here. Okay, there was a 5-minute open range trade, and it's a good day to play the trade. Okay, because we open with a gap and balance. So gap and balance days are good days for potential open range trades. Okay, let's see what the risk reward is on this thing. So the low is 28.75. See if we risk 5 points. Let's see if we get filled on it. All right, so I wouldn't have gotten filled on this one, right? Because I'm risking 5 points. But it did give the potential to, let's see, the open range trade was how many points big here? So what the open range trade means is you let the market establish. Some people will wait a minute. Hogue does a minute open range. Coach J does 3 minutes. I look at 1 and 5. But the 5-minute open range was kind of rich. It was 14 points, a little less than 14 points. And you can see it ended up paying about 2 to 1 on that. But I would have looked to get in cheaper. So like 6 to 7 points probably be the maximum I would try. So this is a poked up, right? So open, we went up, we flushed down. You could have gotten filled here and got a 3 to 1 trade, making about 35 handles. No, 21 handles. Sorry, 7 times 3 is 21. So there was a decent opportunity off the open, but it was a pretty big open range. So I wouldn't have been able to play it because of my risk appetite, but it was successful, okay, early in the session. So what happens next? Okay, here's our volume profile. All right, and let's see here. can't see my, hold on a second. I got to turn this off so I don't crash. Turn it off real quick. And then I got to fix this screen because I can't see everything. Can you all see that okay? Okay. All right. So here's our 1 hour initial balance. Okay. So I'm sure Coach Ray was talking about initial balance with you guys today. So there's our initial balance. Okay. We have the open range at the low of the session. We have a gap on the open. So a lot of these indicators, indicate a bullish sentiment to the market. But what happened today? Okay. What happened? Let's take a look. All right. So we get into this gap here. Right. So there's a lot of things to look at. I'm going to show you guys all this stuff. So there's a lot of visual nuances in this market. Okay. So let's just take off some of these trend lines. There's a lot of stuff on the chart. Try to keep it simple, right? Let me just clean this up here. All right. So we have an old gap right here. Okay. We still have this outstanding gap. And what happened today? All right. We open above the point of control. We open here, close the gap. Okay. That's a visual target. Okay. We open bullish. We're trading up. We get up here. And a lot of people probably started buying this breakout. Okay. But what happened? It kind of blew up in their face. But what happened? We closed the gap. So when we got up into here, the sellers may have reappeared. Okay. Let's look at, I'm going to do top step daily levels. Let's see, where are they? Where are the daily levels? They're not on here anymore? Where's the daily levels at? Anybody know where they went? Okay, yeah, let's pull them up there. So, thank you. All right, so let's see what levels I have. I don't know if I have this on there or not, but 6064. Yeah, so here we go. I have resistance here at 6063. Okay, so 6063, I have resistance on this top step daily level. Now, market comes up here, right? Initial balance is in. We break out of the initial balance right here. Okay, break out, pull back into it, and then we go. We get up here to 6068, and then what happens? We rotate back into the range. Okay, we rotate back into the range. 6063 is resistance. 61 quarter. So here it is. So we come up here, we put in a high of 6068 quarter, we rotate back inside the range. This is a very good chance to take a short. Okay. You take the short, risking the high of the session. And it gave us quite the trade. Okay. This is called failed upside auction. We break out initial balance, we fail, we rotate back into the range, and then we sell off for the rest of the day. Or sometimes we just want to ride it to the center of the range. Okay. So here's point of control, right? We keep on dragging out volume, value. point of control. We break through point of control. Once we get through point of control, it's kind of like, all right, maybe we're going to push further, right? We get through here and we're pushing down. But this was an area of resistance, okay? And we're pushing down. We get down here to value low, okay? Down here, 4-1. This is a great way to cover. 5-1, excellent place to cover, right? But then we have this gap from today. And what do? We started to trade inside of the gap. We didn't get a close though. The gap close would have been all the way down here. All right, so we do still have somewhat of a gap right here left over. But this short gave an opportunity for 8 times the risk. Okay, so 7 points gave 8 times 56 S&P points. Go big, go bigler. You don't know. That's the whole thing with trading. Okay, anything can happen. But as long as you're limiting your risk, it's worth the trade, right? If you know what your risk is and you know what your potential profit could be and it's over 2-1, I would take the trade. Even if I'm wrong, okay? It's okay to be wrong. See, that's the one thing in trading. A lot of people think you need to be right all the time. Okay, you don't. You just need to have a bigger risk reward to risk ratio. Right, 40% win rate, 2-1, and you can make money at this, right? You know it's got. All right, so look, we come back into range. 2-1, it's there. 4-1, it's there, right? So this gives a very good opportunity to take the short on this failed auction. There's a lot of people buying breakouts. Okay, and then when they start to get hurt, right, they start bailing out. And then we come down and we almost close the gap. Look what we did do though. What did we do? See this right here? Okay. So this market, which is a plausible target to get out, point of control. Okay, that's what happened with me today in the NASDAQ, and I'm going to show you. All right. So that is what we're looking at today in the SPs. There was a small open range trade opportunity today. It was a little rich for my appetite, but it was successful. Paid out at least 2-1, which is a win, right? If you can make more than 2-1, it's a win in my book. And then this opportunity gave you the biggest trade of the day. All right, let's look at the NASDAQ. Any questions on that so far? Any questions before I go to the next market? And this is where we ended the day. All right, so we ended the day. Point of control is down here. Okay, we visited this point of control. That's checked. Our new one is going to be right here going into tomorrow. Okay, so point of control is now here. All right, value high, value low, point of control. Gaps filled. We still have a little bit of a gap here. Go Bigler, I only really look at it in day session, so it might, but for me, it's not a gap close unless it's done in the day session. That's just my opinion and the way that I trade. Okay, I'm looking at day session data really, pretty much only. But we started the day with the gap all the way up to here. Okay, we filled the majority of that gap. Is that considered a gap close? I don't know. Is it close enough? It's 8 points away. I don't know. But we still have that little bit left. Okay. So tomorrow we have value high, value low, point of control, above value, below value. And then we have a point of control right here. Okay. That's not checked either. Okay. So we have that point of control there. So tomorrow I could see us potentially, trading through this gap, getting to this point of control here. Right. And checking it. Because we gapped above it today. All right. Let's look at the NASDAQ. boy, this I'm not one that trades the Nasdaq a lot today. I mean a lot, but today I took a short in the Nasdaq, and it was a tremendous trade, and you know, burnt me up. I'm going to show you what happened with my risk management. Well, let's cover this on a 30-minute first. So 30-minute chart. Okay. All right. Now I'm going to show you what I did and didn't do. Okay. Let's take off some of these trend lines so it's a little cleaner. All right. Let's look at this here. So we have a very similar situation. Okay. We opened today with a gap, right? Here's the high of last trading day, Friday, and then here's the open. Okay. And you can see we have a gap. All right. We have what? A point of control right there. See that? All right. We have value high from the previous day there. Value high, point of control. Okay. So this market opens, we push up where? We push up into this area. Okay. We had like sellers, right? Hit that area again, and we have sellers again. Now let's move this on a 5-minute. And hold on a second here. All right, so here's the NASDAQ. So here's the NASDAQ on a 5. So we have open range trade. What the heck? Let's see what's the open range. So the open range trade was pretty big. Yeah, 62 points on the open range. But it paid out just under 2 to 1. But that's huge. That's a huge open range trade, even though it was successful off the open. Okay. But this was the market. So let's put on our volume profile. Okay, and this is up to the initial balance time. Okay, so value high, value low, point of control. Here's our initial balance from here to here. Okay, and what happened today? Tell me in the chat, what happened today? Failed upside auction, right? Cheap. All right, false breakout. Okay, market's rallying, right? Everybody's getting excited. They're buying this breakout. All right. See, every time I came up here, selling wick, 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 selling wick. Get a bullish candle, flush. Okay, they were trying to make this breakout right here. They were trying real hard. but they could not take it out. Every time it got to the IB high, it failed. It failed. It failed. It failed. Okay, time and time again. One, two, three, four, five, six, 7 times it failed to break out. 7 times. And it rotated back into the range. And then finally they gave it up. Okay. So I didn't catch that, right? Because I'm not really much of a NASDAQ trader. I watch it. I will trade it once in a while. The NASDAQ is a disrespectful child. You know, it disrespects my levels. You know, a lot of people's levels, right? Because it's a thin market, so it will go fly through it and then go and in the direction you want. And it actually did it to me today. And I'm going to show you what happened here. So here's our market. And I got in late, right? I got in late. And I'm going to tell you what I was thinking and why I took this trade. And it was a monster, really. So, you know, we put in a lot of volume up here, right? You can see up here at this level, right? You can see how all the volume started to build up here. Point of control is up. It looks like the market is pushing up, okay? But it's kind of faking you out. We get below this area, and then we get down here low, right? And here's value low at the time. And I kind of did something I normally don't do. All right. And I got into a momentum type trade today. All right. So I didn't catch this, which normally I would catch a trade like this, usually like in the S&P, but I let the market roll over. Okay. Once we got here to 121,791, I got short. Okay. So I watched this come down. Okay. We got below value. And usually I'm a buyer down here, right? And look, you can see here, the buyers came in with a vengeance and rotated this up. Okay. Usually I would be buying it down here, risking the low. But for some reason today, I was like, well, we couldn't push the initial balance to the upside. Okay. We came into an area where we had previous sellers, okay, that were strong, right? These sellers really ripped this market down, right? So I'm saying, all right, well, we're up in this area, we're rotating down, we're back into where these sellers got really heavy with selling, right? They got heavy here with selling, right? Here, very heavy sellers, very heavy sellers. I'm like, all right, I'm going to try to do the opposite of what I normally do. I think we're going to try and test this point of control here and maybe close the gap. Okay. We're going to maybe close the gap. So I got short at 21,791. I now sit in Top Step TV. I was like, I don't like the trade, right? And quote me. You can go back and look. It says, I don't like the trade, but wish me luck, right? And I took it because I saw this momentum starting to sell off. And I felt that selling it here, okay, I can risk getting back into value, okay, which is totally opposite. Usually I'm buying and looking for it to rotate into value. But my hypothesis was to come and test this point of control. And test. All right, so test this point of control there. And that's exactly what happened. Now, let me explain to you what went down first. So, I'm short here at 21,791. And I'm short, I think 5. Let me see. Let me see if it's still on here. I did 5 MNQs. Okay. 5 MNQs. Hold on. I think I did it. Check something. I think I did it here. Let's see. I did the MNQ on this account here, I think. Yeah. So I sold 5, 21,791. My target was 21,647.50. Let's just go over this. Okay. So originally I got short at 791. Where is it? 791. Okay. I had my stop at I think it was right there. Yeah, my stop was up here. That high, right? So about 20 handles, 21 handles. Okay. Now I'm short 5. Okay. And we get all the way down here. Okay. So I'm short 5. My risk is up here. And my target is down at 47.50. This is my target. Right there. Okay. So that was my target, which lined up with some other things. It was a point of control. And then you can also see this low here. All right. Oops. That low there. And then we kind of had a lot of stuff going on in this area. Okay. So that was my target. Put this on. Value high. Okay. Point of control. 47.50. Right. Point of control from a previous session on the TPO profile. All right. So that's target. Now, what do? So I'm down here, and I'm at 21,740, and I have 51 handles in the profit, right? 51 handles. So I go and I move my stop to break even. Right? I move my stop to break even. What happens? The market rips off of the value low where I would have been a buyer. Okay, but I was still convinced that we were going to take out the low of the day and try to close the gap and get to the point of control. All right, so I stayed short. But on a regular day, I would probably be buying down here, rotation. But I'm already short. I'm 50 points in the money. Got 5. And the market comes up and it stopped me out by 2 ticks right here. Right? So I'm at break even pretty much. This one, I don't know why it says 88 quarter, but I'm not sure what happened there. But I got stopped out of BE. And maybe it was in a different account. But I got stopped out of BE. And then look what happens. Rotates all the way down. We hit money right here at 3 o'clock. Right? 142 points times 5. All right. But let me show you something. This is micro. Okay. I want you to see this on the regular NASDAQ contract. On the regular NASDAQ contract, if I would have been trading regular E-minis, okay, I want to show you what the high was. I would have survived the trade. Okay. The micro screwed me up. So the micro had 2 ticks of slippage. All right. So I'm short here at 91, right? 90, 91. Okay. 91. All right. Check this out. can see it better here. Let me put it on this so you can see it. All right, so I'm short at 91. Okay. This is the bar I got stopped out on my MNQ on the micro. Okay. The high here was 88.50. Okay. That was the high. So I survived. I would have survived in the NASDAQ. The MNQ had more slippage. So it didn't have the same tick values. So on the regular MNQ, this trade survives all the way to fruition. Okay. That's 146 points on 5 contracts. That's a lot of points, right? That's a frustrating trade, and that's real trading. Okay, that's the real deal. Holyfield. I did not profit on it. I wish I could report to you that I did, but real is real, right? 146 points times 5 contracts, 730 points. If you're trading micros, that's $1,460. If you're trading full size, it's $14,600. Right? So that's almost a $15,000 e-mini trade that I got ticked out by 2 ticks. Right? So I probably shouldn't have pulled my stop, but like I said, I'm not a big NASDAQ trader and I don't have the confidence. Plus, usually I'd be buying up against here. Okay, so when this market came down, everybody's selling. I usually would be a buyer, right? Because I like to range bound trade. And you can see right here, it gave it a nice opportunity, right? Market rolls over off the high, perfect opportunity for a short. Rolls down to value low. Okay, value low is right here. Here's the IB low. You're buying up in here. And you're looking for a cheap long. So this would be the spot for the range bound trader to take their long. Okay, 19 points of risk. Usually I'm risking 20. So let's say 20 points of risk. Okay, you get the long, it pops up, it gets back into value hopefully, and rotates back to point of control. All right, so that would be the range bound trader's view on this market, but I was not looking for range. And that's why I said in TV, I don't like this trade, so wish me luck, because I was buying into momentum. But it ended up being the right thing to do. Right? It went down where it needed to go. Right into point of control, right? Boom, target hit. So all these things were visual targets, visual areas, value high right here from a previous session. Okay. So these are things that we're looking at. We still have a gap. Okay, here's our gap still. So tomorrow, going into tomorrow, we have this gap. We have point of control up here from the day session. This point of control is now checked, so that really doesn't mean much here. Get rid of that. Why is that deleting? Okay. So now we're gonna keep our eye on this point of control and this gap. I would like to see this market roll over, fill this gap, test point of control. That's what I would like to see happen. Oh, this one was checked too. This was checked here on this day. So we'd definitely like to see the NASDAQ come in and fill this tomorrow. I don't know. This might be supportive. So we'll see. This could come down, bounce, right? And keep going. Let's look at this on the daily. Sorry for all the drawings. My charts are like Let me put on the MNQ. There's too much stuff on here. So daily chart. Okay, what kind of pattern we have here? This is on the daily, right? This is a longer time frame. Ah, Bag Street. Uh-huh. See that? This is very interesting. This is very, to me, it's very interesting. Okay. Right now, I find this to be an interesting looking chart. Broke structure. We rotate back in. We test the backside. If we can't accept back above this trend line, I like the short. Okay. I like the short. We need to stay. I would love it to be below this line. Okay. And start to head down. Okay. We kind of have all right, so we're heading higher, right? We break structure, we test, we break structure, we test. Hopefully ends up with something like that. And then we have this high here. These are a little bit almost symmetrical, kind of. Okay. So this area, if we stay below this area of 21,962, I kind of like this short side. Okay. But that's not to say if we start to accept back above this upward sloping trend line, then I like back into the long side. But you can see right now we're kind of setting up for kind of a reversal type pattern. Okay. If we're not above this line here, so above 21,900, 22,000, if we don't get back up there, I like the short side. All right, let's look at gold. All right, so let's look at the gold market. The gold is a little bit messy. Okay, we had a reversal here. Actually, yeah, like a reversal there. We had a mini head and shoulders here. Okay, nice defined head and shoulders, right? This is a nice defined one. It's pretty easy to see it. Okay, and then we get the move down. Okay, measured move for the projection of the move, head to neckline. All right, bam, complete. Okay, that's the move right there. Okay, you kind of have another one here on a bigger scale. Maybe this is the neckline here. With another potential move a little bit lower. So let's see. All right, that will bring us down to this line. So this trend line here, this is an outer trend line from way back here, October. Okay, we projected this line out from October So November 22nd, we did this projection of this line, and you can see we're playing with the line, right? Playing with this line. We below it, above it, below it, below it, above it. All right, we drew this slope, came down, went up, testing. Okay. So right now I'm going to take that off. Let's just look at for what it is. What else do you see here? This is just chop. Here's the inner trend line. And what do we do there? Okay, so and this is a very short time frame, right? This 30-minute. Okay, we push up real heavy, break structure, we test backside. We have almost a perfect crown here. All right. So trend, 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 right? See the crown? Right? It looks like a crown, right? Yeah. Make it gold. Gold for the king of crowns. Right? Look. Short right there lining up. That's a very symmetrical crown formation on this upward sloping trend. Reversal pattern. I love these patterns. Okay. They don't always work, but they're very strong patterns. You know, it's kind of like a crown and a head and shoulders all in one. Okay. Now we have this market pushing up. Right. So right now we're kind of in this push up. And then we have this pullback here. And this is kind of like a, you know, almost a bull flag, right? It's almost a bull flag type pattern. Right? We push up, we pull back, structure, and it's just toying around. So this is very, very choppy right now. You know, like this is not a market that I'm very interested in until it starts to show some sort of direction. Okay, but here you can see it again. The 5-minute. That was a 30-minute. Here's the 5-minute. Okay, so you can see here's the trend, right? Trending up. We're doing this. Break structure, retest the line. Right? So that's a reversal. And you can see here that this is very, very symmetrical. Okay, this high, and then it falls. And you risk up here. And so that's a pattern to really keep your eyes on. I like that pattern. But this here, this is you know, chop chop. We've got this congestion area. Okay. So we have congestion, we come back, we have a mountain, right? So here we go again. Base of the mountain, right? Base of the mountain. You don't want to really sell into the base of the mountain. You get a little bit stung, right? The bees will come to sting you when you start to selling to the base of the mountain. So you got this little base here, it comes all the way down, bounces into the congestion, it rotates up, okay, and then finally it falls and breaks through it, but then it came back up, right? So this is just very, very choppy mess right now. I'm going to call this the range. Okay, that's our range right now. We're in the middle of it. So there's really not much to do here in gold. Okay, I don't like the price action. This is choppy, push up, push down. Just this is a like a wash and rinse type thing. You know, took the shorts out, took the longs out, and now we're back in the middle. So I'm not excited about this market. Yeah, let's look at crude oil. PK, why did they go back up? What are you talking about? I'm not sure. Sorry, I didn't see that. Crude oil's looking nice. Crude oil's looking nice. Is this session over 90 minutes? Well, I usually try to do 60, but it ends up usually running longer. And we started late, so. All right, so crude oil, we're almost done here. Crude oil pushing up. All right, we have an inner trend line and we have the outer trend line. Okay, now trend is up, but let's look at this. We have another inner trend line here. Okay, there's another inner trend line. So we have an outer, right? The degree on this is like what, less than 45 or 45 degree. And these are more shorter time frame. So you can see we broke structure here. We're probably going to test this line. If we break this line, I'm looking for the market to come back and test this one. So I would be very, very conscious watching the way that we act around these levels. Okay. So we have this upward sloping line. We get this pullback. We're below it. Most likely we're going to test this line, middle line. And then if we can't stay above it, then I'm looking for it to fall down to this line. Okay. So we got to see what happens up in this area. Oops. All right, let's look at some on a day session. Okay, so let's look at the day. So crude oil opens at 9 a.m. Eastern time. Okay, that's the pit hours. So right here at 9 o'clock, we have an open range trade to the upside. All right, let's check that out. Open range is 21 ticks. Beautiful. It's in my appetite, right? I usually trade crude 20 to 25 ticks of risk per contract. And let's see the opportunity that it awarded us today. All right, so this paid over 2 to 1. All right, so if you're just looking for 2 to 1 opportunities, you would have made money on this trade. Okay, we're risking 21 ticks and it pays out, let's say 2.62 to 1. So let's say 2 to 1. All right, if you're a 2 to 1 trader at 40% win rate, you're making money. Okay, so this gave a nice little open range opportunity. All right, for the open range trade today. Now let's look at the initial balance. And this is a common theme today in these markets. So what happened here in crude oil today? Here's our initial balance. All right, common theme today. What's the common theme? Yeah, no worries, Phoenix. I think it's descending triangle, not sure, but something like that. Phillips at auction. Yeah. So the common theme today: false breakout. Right. We break out of the open range, and traders are getting long, looking for this market to rally off of the range extension. But what happened? So the range bound traders had a feast today. Right? They had a feast. They were loving it. And here it is, cheap as can be. Look at that. Look how cheap that is. Okay. False breakout. Rejection candle. Shorts. Right here, short. This is 6 ticks of risk. 6 ticks. $60. If I'm risking $250, right, on a 50K combine maximum per trade, and I'm risking 6 ticks, I could trade 4 contracts. Right? So I could trade four short. Right? Here's point of control. That's target 1. Target 2 is value low. Oops. Sorry about that. All right, so here we are. Short below the volume. All right, we're pushing down. Selling that came in up there. Take out the IB low here. So great exit would have been at value low. Right before taking out this initial balance low, right? Because we took out, the way I would trade it is we already took out this high. I'm looking for just to rotate back to value low and then exit. So I'd probably get out somewhere like around here, just before you get into this area where buyers might come in, right? Because they're going to come in here at value low, looking for the longs, but they got pummeled. Okay, the shorts just blew them out. Then what happens? So this is 9-1, by the way. And if you try to get it all the way down there, it pays a 10-1 trade. But then they did it again here. All right, they let it come in. They went back up into the range, and then they didn't get it that time. The range bound guys. Okay, they got smoked on this one because what happened was they looked to get long here, risking this low. Okay, so they get back long, looking for this to rotate. You can see you got the big green candle, and they're probably looking for this to rotate all the way back up to point of control. But you can see it failed. Okay, it failed right up against value low. It could not accept back inside of value from earlier in the day, and then it sold off. Okay, and then it sold off some more, and then it sold off some more. So this pattern happened in the ES, the Nasdaq, and crude oil today. Same thing. All right, and right now we're between these 2 points. So this here is probably going to be an area. Maybe we'll find something going on. There's a little congestion zone there, a little buying there. So we'll have to see what happens, okay, in crude oil. But we're between two of these trend lines. I probably would stay out for right now. All right, but if we break this structure, I do like a push down to this one, which would be around $72 a barrel. All right. Let's look at Bitcoin. Ooh, look at that. Bitcoin on a tear. Open range trade in Bitcoin. 5-minute open range. Nice. Broke out, never looked back. So here's Bitcoin. Open range right here. Right. Open range trade was points that is, but this ends up paying out over 7 times. Okay, 7 times the risk in Bitcoin today. If you took it to the high, if you didn't take it to the high and you got out of 5 to 1, 6 to 1, it's still a beautiful trade. Right? Let's say you got out of 5 to 1. Take 5 to 1 all day. Okay. Put the initial balance in. Now, Bitcoin, I'm not sure if it starts at like when metals, but this is the open range and the initial balance based on the US Open for equities. I don't know if Bitcoin's following that because I'm not a big Bitcoin trader. So Phoenix, so that's a good question. For equities, 9:30 Eastern, so 8:30 Central to 3:30 Central. Well, actually to 3 Central, 4 o'clock Eastern time for equities. So ES, NQ, YM, Russell. Okay. Those markets are 9:30 to 4 Eastern time. Gold, 8:20 to 1:30 Eastern time. Crude oil, 9 a.m. to 2:30 Eastern time. 9 a.m. to 2:30. Even though they trade past that, pit hours, I still trade off of the old pit hours because that is when the majority of your volume comes in. Let's check the volume here. I'm curious now. Talking about volume. So the volume starts in Bitcoin. And yeah, just around 9:15, 9:30. You get the little afternoon lunch hour, and then 3:55, you get a little spike in volume. So, this is Bitcoin's time. So I would say 9:30 open. 8:20 is kind of low volume. Yeah, let me show you this, right? So let's look at the ES so you can understand what I'm looking at. So here's volume in the ES, right? You'll see here 9:15. So 9:30, right? That's the open. 9:30. See that big volume spike? And then you see we're heavy volume. And it trickles down after Europe closes or London closes, right? At 11, 12 o'clock, they close. Some of the volume dries up. And then after lunch hour, it picks up again. And then we get power hour from 3 to 4. And 3:55, we always get a big spike of volume. Okay, and then that's the US session right there. Yeah, this is the overnight. It's like non-existent volume. Look at 1:30 in the morning. There's like nothing. Right? The volume is in the US session. All right, that's all I'm trying to say. All right, let's look at gold. All right, so gold. Actually, gold has some decent volume in the overnight. London open 3 a.m. 6 o'clock, you can see it has volume, but I look at it at 8:20, which is the old pit open. So here's 8:20, and you can see right after 8:20, 5 minutes, 10 minutes, we're getting into big volume, right? By 8:30. 8:40, here we go. London starts to close at 11, right? The volume dies down. And then here, by 1:30, right? This is the old pit close. When the pits used to be there, 125, you get the big volume spike going into the close, and then no volume, right? It's very, very low. But now it's picking up at night a little bit. Get a little bit of volume here. But you can see from after 1:30, this kind of, it dries up. Okay? Now let's look at crude oil. Crude oil. 9 o'clock is the pit open. You can see big bar, big volume spike at 9 o'clock. And it's pretty steady with volume up until 2:30, right? 2:25. Look what we get. Big volume bar going into the pit close. All right, last 5 minutes of the pit session, you get the big spike because that's when everybody's getting out, right? Biggest bar of the day is at 2:25 at the pit close. And then look what happens to the volume after 2:30. Very, very low. All right, so I still use these hours in my daily trading hours. So hopefully that answers your question. I know it was a long-winded question, but I wanted to give you the exact reason why I take certain times to trade. Okay, I base all my stuff off of old pit stuff. There's a lot of old timers still trading, right? So It's hard to break old habits. Let's see some questions here. How does the open range trade work? I've never seen that to apply it. Yeah, go bigger. So here's an open range trade. So we're in crude oil. Let me take off the volume profile. And here's our open, right? 5 minute. So we open at 9 a.m. Okay. Now, when you're playing an open range trade, and these don't work every single day, okay? So don't think that you're going to just do it and you're going to be, the next Paul Tudor Jones. There's certain days where they work, there's certain days where they don't. They're streaky, but when they do work, they usually tend to give some pretty good trade opportunities. Okay, so the way the open trade range trade works is you wait for the first, whatever it is, 1 minute, 3 minutes, 5 minutes of the first bar of the day, and then you put a buy stop and a sell stop on each side of the open range. Whichever side is triggered first is the direction of the trade you're taking. Okay, you buy in on a stop on this. Okay, so you're entered long here at 74.44. All right, your risk is down here, 74.23. So you have 21 ticks of risk in this trade. So if you get stopped out, you're probably going to take a 22 tick loss, right? I usually go 1 tick above, 1 tick below, or maybe 2 ticks. So you're going to risk about $220 on this trade. Okay, and the trade triggers into the long side. Okay, you see we start to take off, we pull back, come back into the open range a little bit, and the buyers come back in and bring this market up. All right, so this market does give us an opportunity of 2.62 to 1 at the high. Okay, so if you're just looking to get 2 to 1 on your trades, you would have been out with a profit. Okay, 43 tick profit, $430 a contract on the open range trade per contract. All right, so that's how the open range works. So if you're looking for momentum, open range, that's that. Then you have the range bound trader looking to sell it back inside of the initial balance, hoping for rotation. And then you have the breakout buyers looking to buy it up here, right, for extension. So those are the different ways to look at the market. And you just got to decide which way do you want to take the trade. Yes, correct, Phoenix. First one. So the first candle would be 5 minutes on the 9 o'clock bar for crude oil. And then for the S&Ps, it would be 930. NASDAQ 930, YM 930, the Russell 930. And then in gold, 820. But the thing with gold is you got to be careful because a lot of economic releases come out at 830. So you do not want to be in trades, non-farm payroll day or CPI day. If you take an open range trade at 820, you want to be out within like 5 minutes. Okay, you don't want to hold that sucker into one of those economic releases because you might get tagged with some major slippage. No, Phoenix, you put the buy stop on the right here. So the buy stop. So if it's within the risk appetite, okay. So if it's $250 or less, I can put a buy stop right above it, sell stop below it, and you could be whatever your risk is. I don't know how many points you risk, right? Maybe you risk 30 ticks. I don't know, but as long as it's within a certain risk parameter, I can put a buy stop right here above it. So once this prints, okay, we close here. I have a buy stop working here and a sell stop working here. And then if the market triggers it long, I'm long, and the stop's ready in place. I'll take it. I'll move it down another tick. And then I just let the trade work. Okay. So let's look at a ES open range trade from last week. Where is it? Oops. I'm gonna try to pull up a cleaner chart. All right. So let me show you an open range trade here. $30. easier to find it like this. Okay. So here we go. Here's an open range trade right here. Very, very close to being negated, but it didn't. So here it is. Very, very close. I mean, this stop, it survived and it's legit. But here it is. 2 ticks above the high. So let's see the high. What's the high here? 80. So it stops at 80 half, right? 80 half, 2 ticks above. All right. And we're short right here, right? Sorry. So here's our open range, 5-minute open range. We push the downside, so we're short, okay? And we have our stop in place. This market comes all the way back, scares the hell out of us, right? Almost ticks us out. But by the trading gods came to life and drove this market right back down before you got stopped out. And then it came back again and tested it a second time, okay? And then it came back down. All right, and then we take out the IB low. And now we have an initial balance breakout happening right here. Okay, so it comes back down. We get the initial balance range extension right here. This is a nice range bound breakout trade. This one doesn't even look back, which is beautiful. You know, it took it out. It went hard and fast in the direction. And then I would throw on my EMA. Okay, and I could ride this down as long as we're staying below the exponential moving average. I can stay short. Okay, so I'm short. Put the VWAP on there too. I know a lot of people like the VWAP, but I like the exponential moving average in a trending day. It gives me a guide. It's just like a trend line, really. But it comes down. We take out the IB low right here. Boom, nice clean breakout. Okay, didn't come back into the range. It just straight broke out. Breaks out. Test the EMA. Come down. Actually, this is a great place to take a short up against this high, but we could talk about that another day because we're talking about these open ranges. But we're below the initial balance here, and we're going to ride this down until we get to our profit target, or we get a close above the exponential moving average, which is right here, and then you can exit there. Okay. But ultimately, this thing gave you an opportunity of see, it came down. See, this here is 12 points. That's a lot. That's a lot for me. So I would probably take this and move it back, let it take it out, and then work a short like that. Okay, that's how I would do it because then you can risk less. But we'll just leave it as is. All right, 12 points of risk. Pay gives you a 46, 40. No, gives you opportunity for 51 S&P points. That's $2,500 on a one lot. Okay, if you rode it to the bottom. But I probably would have covered right here. Once, you know, this fell and came up and closed above here, okay, I would have been out. Okay, up here, like 30, almost 30 points. But that's how you do it. You place a sell stop, a buy stop, whichever side is triggered first. That's the direction you're in. Okay, but then there's gonna be days where you're chopped up, like this one. All right, so look at this one. This would be a prime opportunity of a chop. Okay, so here's our open range high, open range low. All right, I have only 1-to-1 in this trade. All right, it's 1-to-1 down here. And then it comes up and does what? It stops you out right here. All right, so you would have lost on that trade. Okay, and then you can actually go back a whole year, 2 years, and check every open range trade and see if it was profitable or not. 20-day EMA. All right. So, any last questions on anything? We're gonna call it a session there. We'll be back in here tomorrow. Go Bigler. What do you mean let it take out and work short? Oh, okay. So here. So in this example, just to, let me take these off. Okay. So here's our open range, right? So in this case, it takes out the high first. So that's the direction I'm going to take on an open range trade. This would have been a stop out, right? But let's say here, you have 17 points of risk. That's way too much for me, right? So if it takes it out, you got a 17-point risk. Okay. Me, I would say see which way it takes out, and Coach Jay does this too, I believe, and he waits for it to pull back to the thing. But what I would do is take it out, and then I'll put it where I feel comfortable taking the trade, right? So let's say I'm willing to risk 10 points. Okay, I could set a limit order here at 10 points. All right, so it goes up, so I know I'm looking long. It comes back down, we're filled here, but then we get stopped out, right? It's a 10-point loss. But that's what I mean by let it take out one side first and then try to get in a little bit cheaper. But in this particular situation, it's a $500 loss. Okay, it doesn't work on every trade. But now the initial balance here, right? And we took out the high, come back. This is a good opportunity to take a long. All right, I'm going to cover that tomorrow, but just give you a quick little thing here. So, okay, we have this going on here, right? And what do we have here? And we'll cover this more tomorrow night. Right, we have an ascending triangle. Okay, so you see we take out the IB high and it pulls back, right? So range bound traders are waiting for this to take the short. This is, they're like, oh wow, they're salivating. They're like, all right, failed auction, short it, sell, 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 and they're selling it, right? And the guys that try to take this breakout initially are getting smoked right now. Okay. Right, above value, right? Above value comes back into value, and they take the short. Okay, and they're looking for halfway through the range. So the range bound short is taking this short right here, and they're looking for rotation for about half back, and then they're happy with that. Okay, it's probably a 2-to-1 opportunity, and I'm cool with 2-to-1 all day, right? It might be a little score, it might not be a home run trade, but let's see what the risk is on it. Give you an idea of both sides of the story, right? There's two sides of the trade. Okay, and about half back. So there you go. That's almost a 5-to-1 trade. All right, so that's a beautiful short. You know, you get the false breakout, rotate back in, you open on this candle inside the range, you should take the short, you risk the high, and you rotate down, and you get yourself a nice little 5-to-1 right there. Boom, 5-to-1 on the trade. But then what happens? Market rotates around. Okay, now we have a little slope to the upside, and then we take out all the shorts, and then we break out. So the greedy ones who didn't cover here, that are still short, and they're probably getting popped. But right here we have an ascending triangle, which is kind of squeezing the shorts, right? You see that they shorted it here, they shorted it here, they shorted it here, they shorted it there. There's a lot of shorts, and we're squeezing those shorts up. We're squeezing the juice out of them. Now, if this would have got down here, these shorts probably would have covered all the way, right? And then you get the long, whatever. But we break out. This is a nice conviction candle. We never come back inside of the initial bounce. This is a successful breakout. This is a failed breakout. This attempt took it. Okay, a lot of times if people take this attempt, they get squeezed out. They're short. It comes back up. It goes without you, right? How many people in this room how to trade it? It squeezes you out, you puke it, and then it goes without you. PK. What is that? That is a pennant formation. On Coach J's, that's a pennant formation. It's a consolidation type pattern, so it's going to break in one direction or the other at some point. Let's see, is halfway point of IB a good reference point? For what? Halfway point of the IB good reference point for what, Kev? To get out? If you're range bound trading, it's a perfect spot to get out, halfback. Let's see. Yeah, trading nickels. Exactly. It's happened to you, right? It's happened to me. It's happened to everybody. All the time. Yeah. Yes, Kev. Halfback is a beautiful opportunity. Halfway through the range, you know, if you're on multiple lots, you might want to get one off, move to break even, and then put another one at value low. Okay, so at least you take one off with a profit, and then you move the other one to BE. But here's a I'm just getting to a little quick thing for tomorrow. What's going on? Doesn't want to work. Okay. And let's put on this EMA. Okay. So this is a trade that I took the other day. Okay. And I had a nice win. I posted it in my coaching room. I took this trade. Actually, I think I still have it on here. It's too late to show you now. But anyway, I took the long right here. And covered it for I think I covered it at 91. Okay. So we have this breakout, right? I didn't take the breakout trade. Market goes up, it pulls back. We get a bull flag. I take the long here, risking this low. Okay, get the bull flag, get the push, the pullback, the bull flag, get the little confirmation. I work my long up against this line so I could limit my risk. Okay, limiting my risk, very, very cheap trade. I'm risking 3 points on this trade. 3 points. And I got 5 to 1. What did I get? Yeah, I had to put 5 to 1 on it. So that would be right here at 15 points right there, right? So, yep, 3, 15. Okay. Yep, and that's where I covered. I covered right up here. That was a nice trade. I started in the combine with it, in this combine. I don't know if I did in the XFA. Yeah, I think I did. But anyway, in the combine, and I can only make 1,500 for the day, and I was long 2 in each combine, so that was my target, right? $1,500, boom, out on all accounts. All right, so we're gonna leave it there. I wish everybody a great trading day tomorrow. Okay, just manage your risk as best you can. All right, hopefully the volume comes back into these markets in a good way, and some of this chop goes away. And looking forward to a good 2025. So no reason to rush this week. Okay, it's still kind of holiday trade. Maybe second week of January we'll get most of the traders back in the room, and just manage your risk and look for good opportunities. You don't need to flip 100 contracts a day. Okay, just try to find good setups that give you good reward to risk ratios. Okay. All right, so have a good night. Take care. Bye for now, and we'll see you tomorrow night. It's Coach V signing out.